Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing world of corporate finance, and guess what? Today we have a real treat, a look at MGT Capital Investments and their latest quarterly report, a document that might just have you scratching your head, but don't worry, it'll be your guide through this financial jungle. In this video, we will dive deep into MGTI's financial statements to see what these numbers truly reveal about the company's health and its future prospects. Make sure you stay tuned because some of these figures are quite revealing. And hey, before we jump in, if you love getting these simplified breakdowns of complex financial documents, please hit that subscribe button and ring the notification bell. Also, join our growing community on Discord, linked in the description below. It's a great place to connect and discuss these reports further. Alright, let us start by looking at the basics of this filing made by MGT Capital Investments Incorporated to the Securities and Exchange Commission, or CC. This report is their Form 10Q, which is a regular update on their financial performance for the quarter ending the 30th of September 2025. It's like a check, up for the company, basically letting investors know how things are going. Now let's jump straight into the financial balance sheet. This table shows what the company owns and what it owes at a specific point in time. As of the 30th of September 2025, the company had total assets of just $36,000. That might sound incredibly low, and frankly it is. Compare that to the 31st of December 2024, where they had about $764,000 in assets. This is a massive drop in what the company possesses. Looking at their liabilities, which are what they owe to others, things are also interesting. For the same period, the 30th of September 2025, their total current liabilities were $1,198,000. This means they owe a lot more than they own right now. This often points to a company facing some financial pressure. When we look at their common stock, they have issued a massive number of shares. At the end of September 2025, they had over 4.3 billion shares outstanding. This is a huge increase from about 2.4 billion shares at the end of 2024. This usually means they have been issuing a lot of new stock, perhaps to raise money, but it also drastically dilutes the value of each existing share. Think of it like cutting a pizza into many more slices. The slices become smaller. Moving on to the income statement, which shows how much money they made and spent over a period. For the 3 months ending the 30th of September 2025, they recorded zero revenue. That is right, absolutely nothing. This is a huge change from the $62,000 in revenue they had during the same period in 2024. This zeroes out across the board for both Bitcoin mining and hosting services for the 3 and 9 month periods in 2025. The company clearly had to stop its main operations. In 2024, they were bringing in money from Bitcoin mining and hosting services, but now that stream has completely dried up. The 9-month total revenue for 2025 was just $87,000 compared to $252,000 in 2024, a significant drop. Naturally, with no revenue and still having operating expenses, their operating loss was quite large. For the 3 months in 2025, they lost $227,000. For the 9 months, it was $578,000. This shows that even though they stopped generating revenue, they were still spending money on things like general and administrative costs. And when we look at the bottom line, the net income, or in this case more often a net loss, you can see the impact. For the 3 months in 2025, they had a net loss of $202,000. For the 9 months, it was a much smaller net income of $30,000. This is a significant shift from 2024, where they had a net income of over $5.9 million for the 9-month period. This big swing is a critical point to note. This next table shows how the equity or ownership stake in the company has changed. It details things like new stock issuances and how profits or losses affect the overall value. Looking at the balance at the 30th of September 2025, we see a significantly different picture from the previous year. The total stockholders deficit, which is like a negative net worth, is now $2,332,000. This is a big change from the deficit of $2,190,000 at the same time in 2024, indicating the company's financial position has weakened. The start of 2025 shows a deficit of $2,488,000. Then there were several stock issuances that changed the numbers. On the 22nd of September 2025, for example, they issued 500 million shares of common stock in connection with a note exchange. This is a massive amount of stock, and as we saw before, it really dilutes the ownership of existing shareholders. By the end of September 2025, the deficit stood at $2,332,000. This increasing deficit, along with the massive increase in outstanding shares, paints a picture of a company struggling to stay afloat. Now let us look at the cash flow statement. This tells us where the company's cash came from and where it went. For the 9 months ending the 30th of September 2025, the company used $762,000 in cash from its operating activities. This is a lot more than the $472,000 used in the same period in 2024. This means their day-to-day operations are consuming more cash than before. Remember, they had zero revenue in the last quarter of this period, so this cash burn is concerning. On the flip side, their investing activities provided $1,350,000 in cash. This is a direct result of selling their property and equipment as noted in their notes. This sale was critical for bringing in much needed cash. Financing activities showed a usage of cash in 2025 of $562,000 compared to a provision of $464,000 in 2024. This means they had to spend money to manage their financing, like paying down debt rather than bringing new money in through financing methods. Under the notes to the financial statements, we find important context. It explains that MGT Capital Investments Incorporated historically operated in Bitcoin mining and hosting. However, following the expiration of a key hosting contract and the cessation of their own mining activities, in March 2025, the company stopped generating revenue from these core operations. They sold their Georgia facility in May 2025 and are now looking for new business opportunities. This is a critical section. The company states that they have incurred significant operating losses since inception and have an accumulated deficit of over $426 million. Their cash balance at the end of September 2025 was a mere $32,000. Management acknowledges that these factors raise substantial doubt about the company's ability to continue as a going concern, meaning their ability to stay in business for at least another year. They plan to raise more capital through debt and equity, but there is no guarantee they will succeed. Interestingly, a schedule of digital currencies shows they held 0 crypto assets at the end of 2024 and 0 at the end of September 2025. This means even though they were in the crypto mining business, they were converting everything to dollars and not holding on to any volatile digital assets. This is a smart move given the market. Here we see details on their physical assets. The good news is that as of the 30th of September 2025, their property and equipment net value is 0. This is largely due to the sale of their Lafayette, Georgia facility for $1,350,000. They had a gain on this sale, which helped their cash position. This sale signifies a major shift away from their historical operations. This section details their debt. On the 1st of November 2024, they had a significant debt restructuring. By September 2025, they had exchanged a note for a new convertible note with a principal balance of $1,220,000 and a maturity date of the 31st of December 27. They also issued 500 million shares of common stock as part of this exchange. This is a large amount of debt, and the issuance of so many shares to settle it raises questions about the company's long-term financial strategy. This note details a past partnership agreement and lease for their Georgia facility. It highlights a significant loss at the inception of the agreement related to issuing stock as part of the deal. While the lease expired in March 2025, there was still a liability for potentially issuable shares at the end of the period. This shows the lingering effects of past business decisions. In the management discussion section, they clearly state that following the cessation of mining operations, management's focus has shifted to preserving liquidity and evaluating strategic alternatives. They admit that without active revenue generating operations, they require additional funding, and that there can be no assurance they will be able to raise it. Looking at the cash flow summary again, the operating activities used a substantial amount of cash. For the 9 months ending the 30th of September 2025, it was $762,000. This is a significant burn rate, especially considering they had almost no revenue coming in during this period. The strategic outlook is perhaps the most telling part. They are focused on restructuring their balance sheet and evaluating new business opportunities. Areas of interest include financial technology, blockchain, infrastructure services, and digital asset management. Essentially, they are pivoting from a company that mined digital assets to one that might provide services or infrastructure related to that space. It's a familiar story for many companies in this sector, looking for a new direction after the boom and bust cycles. Now let's put on our Warren Buffett hat and analyze this. MGT Capital Investments Incorporated is in a very precarious financial position. They have virtually no revenue from their core business and a rapidly dwindling cash balance. The massive increase in outstanding shares and the significant accumulated deficit paint a picture of a company that has struggled immensely. The sale of their facility and the debt restructuring were necessary moves to buy some time, but it is clear they are still very much in survival mode. The key takeaway here is their move away from mining and towards potentially offering services or infrastructure related to the digital asset space is a smart pivot, but it is a highly competitive market. They have essentially sold off their operational assets and are looking to reinvent themselves. The success of this pivot hinges entirely on their ability to secure new funding and execute a new business strategy effectively. Without new revenue streams and a clear path to profitability, their future remains extremely uncertain. The fact that they are admitting substantial doubt about their ability to continue as a going concern is a serious red flag for any investor. Alright, that is our deep dive into MGT Capital Investments Inc. Its latest filing, what do you think about their pivot and their financial situation? Let me know your thoughts in the comments below. If you found this analysis helpful, give it a thumbs up and subscribe for more corporate breakdowns. And again, join us on Discord to keep the conversation going. Thanks for watching, and I'll see you in the next video.